Hi, welcome to the Market Alert for Thursday, the 21st of November 2024. So missiles, Michelle and miss target spark, stock dump and pump, Bitcoin and gold jump. I would prefer to proceed cautiously in bringing the policy rate down to better assess how far we are from the end point being inflation, I suspect. And talking of inflation, yesterday inflation rose more than expected for the UK. Interest rate cut chances fall away. Let's just have a look at the numbers for that yesterday. Let's just go back a day and you will see. Oh, hang on a minute. Back again. No, try going forward. Tuesday, Wednesday. So we had 2.3 instead of the forecast of 2.2, previous 1.7. So a bit of a problem for the current incumbent, Reeves. She's going to have to deal with this now. So yeah, I should have a look, see if we can see the RPI. They always used to use this one, but then they downgraded it to a medium impact news item, and that was the one they always used. So there again, you can see it's gone up from 2.7 to 3.4, forecast at 3.4. So not so much more of an issue there for this one. Let's have a look at today's economic news. Let's just get rid of the low ones. We've got unemployment claims from the US. That's the first economic news item, kicks off at 1:30. Philly Fed manufacturing, that's to show a decrease, in existing home sales to show an increase is where the forecasts are there. Right, let's have a look at the markets and kick off with the Dow. But just before I do that, there's still some more news that I've forgotten about. US stocks finished mixed and price action was choppy in a daylight session with geopolitics and Nvidia earnings in the spotlight, and then stocks and bonds chop to geopolitics ahead of Nvidia earnings. I thought they'd actually already been released, but obviously not. So yeah, I noticed that the UK now is implicated into the Ukraine-Russian war. I mean, participated yesterday with UK long-range missiles. But there you go. No surprise, really, as we spoke about that yesterday, that it wouldn't take Storm long before we were dragged kicking and screaming into this mess. Right, let's have a look at the markets and now kick off with the Dow. And in the Dow yesterday, we've got a bit of demand coming into the markets. We are oversold at the moment on the downside. We're still trying to get back and stay above the 5-bar moving average. Managed to do this yesterday. And overnight prices are sideways to high, but still struggling a bit there. In the 30-minute, you can see why. 200 MA has put the brakes on the market there. But just going back to yesterday, prices were up. They were down. They found support at the 50 EMA and at the close of Tuesday. We got a retracement there of 100% by the looks of things. Let's just grab 100% line there. Yeah, so 100% retracement for yesterday morning there, and then prices falling out of bed when the cash market opened, but then trading sideways, finding support, and bingo, either the plunge protection team or a change of mood, whatever, market is then brought back, and at the moment we're trading off the DP and the 50 EMA, but like I say, banging ahead against that 200 MA there and the close of yesterday and the high. Let's have a look at the DAX. So in the DAX, sideways, like I say, the UK and Germany too close to the Ukraine, and particularly as now we're party to the events, so we're holding things back a bit, plus the inflation in the UK. But German DAX sideways there, still below the 20-bar moving average there, struggling a bit. So not a lot to report there, just stuck in a sideways move. 30-minute chart, so we moved down. And then the 200 MA became a problem for this market. Sell-off in the afternoon with the Dow, and then the market coming back. But nothing like the Dow that came back over 80%. Market sideways overnight below the close, and the DP, and struggling at the moment with the 50 EMA there. In the S&P 500, the market is sideways to higher. 2 green bars showing a bit of strength there, as the headlines said there, waiting for those Nvidia earnings. So again, it's part of the S&P 500, so expect the market to shoot up a bit if the earnings are good. Other than that, the market is just sideways, but the momentum starting to shift as stochastics moving up there. S&P 30-minute market, you can see the sell-off there, but again, you can see that retracement back to the high of Tuesday. The market then back down, the high of yesterday on the overnight. And then prices stuck at the DP and struggling there a bit at the moment. Meanwhile, Reeves is still impacting the market. You can see there we have got green in the MDI there, but the market still struggling with the 20 bar moving average, as can be seen, and the 30-minute very choppy for yesterday, being supported by the 200 MA, though. You can see the volumes there in green as the market got back down to the 200 MA and then moved back. Choppy at the moment, market above the DP for the moment. Well, not now, because we're just coming down to that BRN, but it was above the DP for a while, but struggling there as well. So still weakness around. Geopolitical events are certainly not going to help these markets either. Meanwhile, in the US dollar, this continues to move to the upside. Got a bit of a retracement going on there at the moment. It looks about 98% for the US dollar. Just drag it around a bit so you can see it. Interestingly enough, the metals markets held really well yesterday. In fact, more than I would have thought, given the opportunity to actually move the dollar down. They would have been smacked lower, but they weren't. What we'll do here, as I'm already on this page, is have a look at the gold-silver ratio, mix it up a bit, and you can see there yesterday moving back up to that 86 level. Like I say, 90 really is on the cards if they allow it, but there seems to be some strength coming into the market yesterday and obviously overnight, because the gold-silver ratio is currently moving to the downside, which means silver's moving better than gold as I record this video. So let's have a look at the price action of these two markets. Starting off with silver, down yesterday as forecast, but not any major selling. Momentum starting to get above the midline there, and also still above the 5 bar moving average as light of the green bars, and still trying to move up as well. Got the 20 and the 50 to get out of the way if prices are to move higher, but there's a lot to expect this market to do. It's probably going to trade sideways for a while, if not lower. There you can see we're back at 50%, 38. We need to get above 62, 78 and 89 to stand any chance of getting to where the last leg of the sell-off occurred there. In the 30-minute, moving down in the pre-market, the London fix again red triggers the down move there into the evening, but then the 200 MA picks up, and the fact that the market's oversold and moving prices back to the upside there. In the gold market, back above the 62, got a problem there with the 20 bar moving average and the 78% retracement should prices continue to move higher. Momentum's moving in the right direction there as well, and there is some resistance above the 89 as well, as you can see there where the last leg of the selling took place there as well. In the 30-minute chart, nice and smooth to the downside to begin with. You can see the selling there, and then you've got the green bar stopping the down move, and then prices moving to the upside with the selling momentum there. We became overbought, we've had a breather, and then moved up on the overnight, and still okay at the moment. We still have to get above this high more convincingly, and then above the R1 level there as well. So speaking of markets, let's have a quick look at yesterday's trades. So in the pre-market session, we had the inflation numbers from the UK, the market responding down initially, and then we start to move up there, and then as soon as we open, we become sideways. The market doesn't know what to make of those numbers, and then we have a buy signal there, which you can see the market, the scalp being at the resistance area, so we can expect the market to stop at that level, which it does up to the BRN. We've got the red inside of the green, and then the market moves back down with another potential sell. We've got support to the left, 50 EMA to take out as well. So prices come down to the BRN, they go through, and then what I've done here is drawn in, if I can show you, drawn in a retracement from there to there, projected it down to see if the market would get down to the 89% retracement there, and then just moving forward, move the stop to break even, and then prices are sideways, finding support, I can get this to move. There we go. And as the market comes back, it's a case of, there you go, now you can see the stops being moved, and then we hit the 78% retracement. 78.89 is where the market tends to find support, and then it turns around and comes back, takes out the trade for a small profit, and then we go down, which is classic really. We've got a bit of a bounce there, but you can see off the 200 MA prices then find support. We get another potential buy signal, and what I've done here is drawn in the resistance to the left, and you can see the market stopping at this. I've moved the stop to break even to see if the market will actually break out, so give it a chance to breathe a little there. Market comes back, then breaks through, and then I've gone from there to there with the retracement tool to see if the market will stop at the 78 and 89, and then moving stops, etc. And then as the market came back again through 89%, taking the trade off the table, market retraces down to the 50 and 20 before then going short. And once again, price is trading down to the 200, and we know what happened last time the market got to the 200 MA. It turned around and moved to the upside, and there you'll see that through the mid-morning starting to move and then coming back below. And let's get to the afternoon for the US opening, which we saw the market sell off sharply. So prices moving down there, all of the average lines in the right order, as weakness dominates there with that sell-off in the Dow and the S&P, and then we have a potential buy as the market retraces, and prices moving up again, just trailing the stop, and then as the market comes back, deciding to hang on a minute or two here, see if it just gets back above the 5. It does, and then up to the DP, and then when we hit the DP, taking the trade off the table, because we're at 89% from there down to there, projected up to there, and then it's also a psychological level as well. But the market goes through that bit despite me jumping out, and stops at the close before then coming back. So I don't mind that at all. You can't pick the tops and the bottoms. You just have take the bit out of the middle, as they say. And we've always said the best part of a sandwich is generally the filling. So yeah, if you can have those sorts of trades that we had yesterday, I'm more than happy to have them there. And a quick look overnight. Prices are sideways, really meandering above the 200 MA so far in the 2-minute DAX there for the scalping trades. So not a lot else to report. The news of the UK being implicated and involved in the providing missiles that are being used by Ukraine on Russian targets seems to have disappeared overnight. That's not really showing up, but no surprise there. It's about control, isn't it? Controlling the narrative and the propaganda machine, which the mainstream media is. Right, that's it for this one. Have a great day, and as ever, thanks for watching. See you in the next one.